You're watching Business Week on Arise News. Now, joining me to review some of this week's business stories is Arise business analyst Bode Ososami. Thank you for joining me, Bode. Great to have you in the studio with us this morning. The first thing I'd like us to talk about is the political transition in Nigeria. What do you see as being the main impact on the investment climate and potentially the domestic equity markets?
Well, the markets, like you, of course, know, like continuity. And if you're going to see discontinuity, it should enhance market friendliness, not erode it. On Monday, just after the election, 5 of Nigeria's dollar bonds were ranked among the 10 best performers out of an index of 71 emerging and frontier nations. And JP Morgan Chase also on Monday said Nigeria's sovereign risk premium narrowed the most this year. But that was a good start. But the story slowly changed as analysts began to see that Nigeria did not get the clean election it needed. And so we started seeing domestic markets decreasing 0.53% on Wednesday when Tinubu was announced, for example. It started creeping back, but we observe, if you look at it week on week, NSE, that's the stock exchange all share index, has increased 1.06%. That is on a week basis on Friday. So the market is not exactly mourning. I think we are seeing a reaction of let's wait and see. Exactly. And of course, Buhari was perceived to be a bit gradualist in his approach, and many are expecting that somebody coming in is going to push faster a lot of the unpopular measures, like ending a gasoline subsidy that's draining as much as 6 trillion naira. That's $13 billion from state finances, sorting out Nigeria's multiple exchange rates and addressing FX issues to boost investor confidence. But there are other issues worth mentioning that markets are looking at. The disputed appellation is still there, so you still have to sort that out. But they've seen that there has been a transition. 2023 elections, the social contract between the population and the political class has changed, and that's going to impact the kind of opposition, demand for results, accountability, performance orientation you hopefully will get. The other thing, of course, is the economic team. But going to the scenarios, I think you could see business as usual. That is 50% probability. That's where Tinubu probably goes through the courts, is able to hold on to his mandate. And despite the vow to make changes, it's still the same party. And we've had these vows before. And in that kind of scenario, you will see the all-share index just continuing to go down.
I'd really like to pick up on that, because the initial market reaction, you could read it in two ways. This was an endorsement of his ability to really stabilize the economy, or was it just more the fact that Nigeria had been through what was perceived by some to be relatively peaceful elections? What are your thoughts? Is that endorsement of his long-term economic investor confidence in his long-term economic plans?
Well, my sense is that investors are not sensitive to promises or manifestos. That's my view. I mean, they're looking at the dials, who's going to move the dials, and when the dials move, they move with it. So of course, you know what the macroeconomic trends are pointing at, specifically high inflation. Geopolitics is now much more intense. You have a climate revolution, which is making clean energy investment more, of course, risky. And ease of doing business is more important. Nigeria is placed on a global financial watchdog, so-called grey list, denoting nations with shortcomings in tackling illicit financial flows. But to your question, my sense is the investor is saying, look, we thought we would have a clean election. We didn't get exactly what we thought. Initially, the news was a bit mixed. Some said it was fairly smooth. In fact, I spoke to a lot of correspondents on the ground who said this was the smoothest election we had. That narrative changed
pretty quickly.
Yes. And I'm sure you now saw people saying, wait a minute, let's see what happens. Is this going to be a dispute that's going to lead to a lot of uncertainty and end up in chaos? Or is this something that would be manageable and we'll move on, and of course we'll see how Tinubu does.
Yeah, and you mentioned some of those economic imperatives. You talked about the exchange rate, the fuel subsidies. Which one of those issues, many issues, and I only mentioned two there, do you think he should tackle almost immediately?
Well, the most important one, of course, is security. Because if you don't deal with the security, nothing is going to work. The sectoral reforms aren't going to move anywhere. And then, of course, after dealing with the security, I believe there are some other quick wins, especially the foreign exchange market. You just have to give investors confidence in our markets. It doesn't matter what you think. Investors have to say, I'm comfortable with bringing capital into Nigeria and taking capital out. That is not exactly the situation. So there's a lot of investor confidence issues that have to be addressed, apart from security. And then, of course, you also have to look at many things, the social contract. Mind you, there's a lot of distrust. The gap in the deficit in trust in Nigeria now in our institutions is horrible. People don't trust the courts, they don't trust the central bank, they don't trust the police, they don't trust the land revenue. If you bring a pope to come and rule, and people don't trust your institutions, it's not going to work.
Yeah, indeed.
So you have to build that trust back. And I think getting the trust gap lower and getting these institutions strengthened should be one of the first things that he does if he's going to be successful.
Absolutely. A really great analysis there on Nigeria. But Nigeria also operates in the global context. And we've seen global stock markets recent this week. Some positive signals all around. What exactly is going on and how do you think this will be sustained?
Well, it was quite interesting. The bottom line is the market started on a shaky note on Monday. And then, of course, we started seeing very strong data. There are three things that typically move markets. One is the data. And I'll talk a bit about that. The other thing, of course, was the Fed commentaries, the interest rate trajectory that we're likely to see, inflation, and so on. And then, of course, the outlook for business based on corporate earnings or some of the news coming out. So we had China data, just like you said, it was quite strong. And of course, the news now is that China is going to maybe get to 6% GDP growth in 2023. That is good news because China is a huge, huge driver of the economy. The US tends to be a driver of the monetary scene, but China is the driver of the economic scene globally because that's where the growth is going to come from. So if China is doing better, obviously markets were getting a bit more encouraged. The other thing, of course, with the data that we saw, all the data, the PMI data that came out from the UK, all was better than expected. Even Europe, better than expected. People are now saying maybe Europe is going to not go into recession.
Yes, it seems like we're going to avoid
exactly,
that.
We're going to avoid
signals.
recession, exactly. And even UK may avoid recession. So the data is looking much, much better. And in the US, strong data, of course, that's a double-edged sword because the real concern in the US is about rates. What's going to happen? What's the Fed going to do? The Fed is trying to manage expectations. That, I think, is tricky because the Fed is data dependent. They only do what the data eventually tells them to do.
Well, Christine Lagarde had mentioned, I think, that they were going to stick to their rate rises for the foreseeable future and the market shouldn't expect a sudden easing. So do you think the Fed might even take cues from what European markets are doing?
If you recall, this time last year, Lagarde said there will be no rate rises at all. She said it so many times, January, February, March. I think she started changing around April. So it's still early days. That's what I tell people. Let's see what happens to the metrics, especially the CPI data coming out of Europe. It's not still looking very firm in terms of clarity. And a lot of the factors that are affecting inflation apparently may prove to be transitional, temporary factors, and we don't still know how energy markets are going to move. So it's early days, and I think they recognize that. That's why they're being careful. For now, she says, yes, they're going to continue 50 basis points, and maybe they would look at the data in 2 months' time. I think that's probably the same thing we're going to get from the US. The data will just tell us what's going on. But many are saying that the chances are the US is going to be much more hawkish because inflation, if you look at the latest one that just came out, it certainly wasn't going the direction they exactly expected. So markets tend to be, in my view, they want to see, they tend to act on what they want to see rather than what is actually there to see. And the Fed has been saying, look, we are going to be hawkish. We're looking at the data. Markets are saying rates are going to come down, rates are going to come down, rates are going to come down. Those narratives don't exactly...
Indeed, and it's worth bearing in mind some of the global macro factors. Ukraine, we just celebrated the first year of that war crisis with China, which had a huge impact on global energy markets. So there's still some macro factors, I think, happening around the world, which have not necessarily eased in the short term. I want to sort of get your thoughts thoughts on some stories that have been developing again out of Nigeria. We saw some news emerge about some explosion that happened at a Shell facility in the Niger Delta region. An investigation is ongoing. This is not the first time we've had some of these high, big risk issues. We've had environmental oil spills. What are your thoughts on why we're still dealing with some of these issues so far down the line in Nigeria's history as an oil-producing country?
Yes, well, these issues there's a lot of historical context to it, and I don't have the time to go into all of it, but it's quite unfortunate. There are three main points. The regulatory environment still has to come up. If you look at these cases, they're being pushed by these amateurish groups. We actually should be having the regulatory institutions pursuing these cases vigorously. And they should be the ones saying, Shell, you've got to write a check of $3 billion because of XYZ. And they've done all the work. And of course, Shell knows that these are serious people talking to them. But if you have a group, you and I come together, we get some lawyers, get an NGO on a very thin budget, and you're going after Shell, you're not going to get far. So I think the bottom line is the regulators have to wake up. They say they are waking up, but if they actually were waking up, many of these things wouldn't be happening. Second thing, of course, is that security is very key to investment. All this tampering is real, and if you don't provide the infrastructure in all these locations, you're going to create pressures that's going to make community relations a nightmare. And, you know what's happening? Shell is moving out of these shallow regions. And then, of course, our local courts must also be able to show that they can enforce zero tolerance for the highest standards of environmental for the environment and to deal with any kind of abuse. So far, we see all these cases being tried abroad. I'm not sure how complete the ecosystem, the legal ecosystem is going to look like when you bring all the information, all the data. You're likely to just see a judge who's not quite sure of what's going on and wondering, why aren't the regulators here? Why isn't the upstream regulator here? Why am I talking to these people? Because in other parts of the world, that's how it's done. The regulators are the ones that go after the throat of these multinationals. So my short take is regulators have to wake up to their job and ensure that they hold these multinationals accountable. It's not the multinational company is here to make money, make profits, and they can play this game of, they're always tampering with the infrastructure. So you also have to have your data and have your information and have your evidence.
Yeah, and it'd be interesting to see what the president-elect plans in terms of the broader energy sector policy in Nigeria. We're going to scoot over now to China. This is really fascinating information that has come out. We know China has led in terms of the technology stakes, but this really interesting piece of research showing China even leading advanced economies like the US in terms of technology and becoming a pioneer, trailblazer of sorts. Is this surprising, or is this just really a reinforcement of what we've always known all along?
I think it's a reinforcement of what we've always known, given the fact that China has really, for the last few decades, been pushing aggressively. They've been sending thousands of students into these Western universities, sponsoring them. They know that just 10% will come back, but they don't care. I was at my son's graduation at Manchester. If you look at the science faculty, 80% were Chinese. If you look at those who are graduating in the sciences, 90% of the class were Asians, Chinese. And they've deliberately gone out, and they've been doing this for years. And of course, they're bringing all the money into Europe because, of course, Europe collects fees and all the so-called research they're doing here. So they have been able to push, in my view, a strategy in which they've enhanced their chances in this technology space. All these labs, we understand the Chinese are leading in areas such as even quantum computing, although the US is said to be second. Let me just make some few points that I think are very, very important. This lead did not come overnight, and it's not going to go overnight. And no matter what the US does, China is already having an edge. You can't globalize and deglobalize at the same time. And the other thing is, if China's edge expands, that lead will be translated, especially in the new technology space, it will be translated to a very aggressive geoeconomic and political influence.
Yeah, and actually, that was a really important point, because we often talk about American soft power and the fact that America's technological prowess in sort of innovation has really given it influence around the world. Will this lead to a resurgence of Chinese strategy, even from a sort of geopolitical perspective around the world?
They will certainly want to harvest this edge that they have. They know they have the edge. You don't need this institute to tell them they have the edge. They've been trying to use it. And that's why you can see the US fighting back with all these new trade barriers, tariffs, and bans on this and embargoes as much as they can. So they will push. How they will do it, I don't want to speculate. But we are going to see a much more aggressive China in the next 2-3 years. That is for sure. Immediately, they strengthened their edge. Now we understand the aircraft can now enter into Western space undetected. They've got the technology now. That's what they're really very nervous about. Many of these surveillance technologies, China has moved ahead with the latest 5G and merging all kinds of platforms to be able to be undetected with hypersonic aircrafts that the US is just trying to understand what's going on. So it's the US is calling for collaboration. The West is saying, let's get together and fight this as a team. But, the West are also fighting each other.
Yeah, indeed.
So it's not...
in somewhat, there's a bit of a dilemma here because, Chinese growth, the Chinese economy, what happens domestically is often an important signal of the health of the global economy, and a resurgence in Chinese manufacturing or in its technological prowess certainly has some positive implications for global growth in terms of economic activity and consumption and demand, doesn't it?
Yes, it does. And just like I said, China tends to be the driver on the side of growth, while the US tends to be the driver on monetary aspects. They push the money, they've got the liquidity, and you saw all the monetary expansion in the US, that money flows out. But the growth can only be in an environment where they've got the size, they've got the market, and it's China. Everything in China is huge in terms of size, and they're able to monetize that effectively. That, of course, means they're going to import more oil, they're going to export more things to people all over the world. So trade is going to be boosted, and especially in the Asian markets, although many are trying to have this so-called China plus one policy, moving to India, moving to Malaysia, just in case China does something very aggressive with Taiwan, and then you have to do what you're doing with Russia, with China. But I think that's going to be much more difficult, given the fact that you do need China to grow, because if China doesn't grow, Germany is hurt, because where is all the exports are going to go?
Yeah, and this piece of research that was released by the US State Department said China was leading in 37 out of 44 emerging technologies. Are we expecting to see some sort of definitive response from the US to China's emerging technological strength?
I think they've been trying. The narrative they were pushing for a long time is that China is cheating. They're stealing the technology. They're not as
from
bright.
Who? Stealing from who?
Well, from them, ostensibly. Okay. They're stealing the technology from them. They've seen them taking photographs of very sensitive sites, and they take back the information, and they leapfrog all the learnings they should have done through ways that are not quite right. I think they got tired of that narrative, and now they're now saying we just have to stop the acceleration of this, I would say, innovation, technology push. And that's why they're trying to, I think, hold back the likes of Huawei and so on. I don't think that's going to work.
Okay. Thank you so much, Bode. It's very, very interesting insights there, and a waft of global issues. Great having you on the show, as always.